Good morning. Welcome to Monday. There's a few things to go through this morning. I want to start with the pound because obviously we've seen a very, very strong pound as of late, and there's a few interesting things, a few interesting dynamics going on at the moment surrounding the currency that I think we kind of need to shed a little bit of light on, and that deserves a little bit of recognition. First and foremost, obviously, overnight we've had the house price index come out, where we have seen yet again another 1.8% rise in house prices in the UK. That is obviously quite a significant leap. It brings us year on year into around about 6.5% up from last year with house prices. So it's becoming increasingly clear that inflation in the UK is taking its toll, which is likely to then lead us into a situation where we are forced into rate increases, which is certainly what is being touted and spoken about at the moment for a possible rate hike from the Bank of England in November. Then obviously moving into 2022, the potential for at least another 3. So we've got a lot going on surrounding the pound. Also, there is negatives surrounding the pound currently with the Northern Ireland Protocol surrounding Brexit, which is causing a few headaches within Parliament. That hasn't adversely affected the currency as of yet, and if it hasn't done already, then it's probably unlikely to, which is part of the reason that we have seen such a run with the pound. All positive indicators are far outweighing any potential negatives at the moment, and therefore obviously we are starting to see quite a significant jump with the currency. If we take a look at pound Swiss that we currently have up on the screen, it's certainly looking and certainly seeming like at the moment that the Swiss franc has lost its standing. It doesn't seem to be the alternative safe haven currency that it once was. Whenever there was a little bit of turmoil, a little bit of uncertainty in the world, there were certain currencies that could be kind of relied on to be quite stable, quite solid places to invest our money, to put on our capital while we wait for certain situations to blow over. Now that seems to not really be the case anymore. And what we are starting to see is a shift in dynamic, and that is starting to come into play here. Now, as I say, we have seen some positivity surrounding the pound. We aren't particularly surprised when it comes to the pushes that we have seen on the pound, but what I am surprised to see is the pairs that it has happened against. We've seen massive pushes, certainly on Friday with pound Swiss. I mean, we've seen significant rises. If we come out onto the daily time frame, we've seen significant rises with pound Swiss since a beginning of October thereabouts. We've seen pushes leading into the upside, and then we've seen these little ranges being taken out on the way up. You can see on the hourly time frame, very choppy, very noisy, but we've seen these little waves come into play that have seen prices going up and up and up and up and up. Like I say, since the beginning of October, thereabouts, we've seen pretty sturdy rises to the upside, sat in some consolidation for quite a long period of time before breaking that consolidation on Friday. Come back, retested overnight and looking for that push again. So it breaks now back above 27.30, would probably lead into that final run up into 128, possibly 128.50. That is probably going to be as high as we can possibly look for the pound against the Swiss franc at the moment. Anything above there starts to lead into kind of 134. If we just come out onto the daily time frame, we can see it a bit clearer. Just going to get the crosshairs up. But if we look across in the near past, in the recent past, well, I say recent, but through to 2016 here we can see that the only real place that this goes after 128.50 is to 130.50. From there, it's anyone's guess, but you can probably bank towards somewhere around about 133. So it's very interesting. You can already see, just come out to the weekly time frame, that we are trending and trading in areas that are not uncharted but haven't been visited for a little while. This is all pandemic noise. That's the only reason that we've been down this low. Bar that, not even Brexit managed to push us that far. So we've seen uncharted territory. So coming up back to trade in areas that have had those pockets of time where we've had a lot of trading volume in and around. So through this area where we've been 2011 all the way through to 2016, then again more recently through 2019 through 2020. So a break back inside of this area is a more comfortable area, a more comfortable position for the pair to be, and therefore that is likely where we're probably going to end up as things stand at the moment. We are just sat in a lot of consolidation though, a lot of noise as we can see. So we do just need to give it the time it deserves to play itself out. As things stand at the moment, 127.30 is the big area. Failure to break back above that, especially when things are going well for the pair, would definitely spell some problems. As far as the week goes though, and the outlook for the pound, it's going to be quite positive. We've got CPI figures coming out, so inflationary figures coming out towards the middle of the week, I believe. I think Wednesday is the CPI figures, and then we've got PMI and production figures on Friday, is it? I think Friday. So we've got a few things to be mindful of, and a little bit of positivity almost certainly is going to rubber stamp the fact that November will see a rate hike for the currency. So keep an eye and keep watch. The thing that, like I said, that I'm most surprised about at the moment is that the pound has only gained against a few pairs. Pound yen and the yen in general has obviously been very, very weak. It's taken a bit of a battering for weeks now, but we can see last week a huge push, 500 odd pips for the pound, unanswered all the way up. Sitting around where we are at the moment, around this 57 region, you've got 56.80, 56.60, somewhere around that zone. That could potentially act as a catalyst for a pushback to the downside. We've seen the pound Swiss, pound yen, 2 seconds. No, it was at pound. Not pound Oz, not pound New Zealand. I don't even think pound dollar pushed on that much, to be fair. But pound dollar still moved a couple of hundred pips last week. So we've seen the pound push up astronomically. So it makes sense that at some point in the near future, we're going to see that retracement, we're going to see that pullback occur. You can't go 600 pips without any form of a pullback. Even if you were to go on the basis of the fact that you've had a breakout from this region, you can't go 450 pips and not see some form of a retracement. So dips back below 156.60 would definitely lead us into wanting to take potential looks at pound yen shorts, at least back into previous areas of consolidation. Now, if we consider that we had these swings previously, somewhere back in and around 53.20, 53 would make a lot of sense for the pair to come back and test. In fact, I'm just going to bring that up and then I'm going to pull that in. So somewhere in and around 153.50, 153 would make a lot of sense for the pair to come and retest that area as a potential zone, as a potential area of breakout, a higher low to be formed before then obviously seeing the push to the upside. As things stand at the moment, I don't actually think I've got an upside target. I don't believe that I was prepared enough to see such a significant push and significant move. I think it's pretty safe to assume that we could be preparing to come back into this area though. Yeah, I don't see why not, 163 seems to be the most likely destination. So if we can stay above here, get above 158, after such a significant move and after such a significant push, it would be quite uncommon to see that just continue and not see some form of a pullback into a significant area. So we may well see a push into 158 before seeing a return to 156.50 and then going from there. So we will just keep an eye at the moment. But it seems like for all purposes, when it comes to the lower time frames, certainly this morning, price seems to have stalled a little bit. So we could well be waiting now and then just to see kind of what happens towards the middle of the week, Wednesday, Friday, when it comes to pound inflation figures, and whether or not that is going to definitely lead into potential rate hikes. Now, pound New Zealand and pound Oz are two currency pairs that we didn't gain against. So if we look into last week, we can see a significant push to the downside, that engulfing candle coming in from 196, closing down at 194. We're chilling around about 194.50 at the moment, I think. But you can see that Wednesday, Thursday, Friday last week, we saw significant pushes. Now, that's just led us into a very range-bound period for the pair, and a very range-bound situation that we just need to keep an eye on and be mindful of at the moment. If we were to reject from range low, potentially break back above the highs here at 195, then 196, and a potential breakout to the upside are certainly going to be on the cards. You can kind of see at the moment we've got ranges with inside ranges. But you've got this little area here, this pocket where we currently are sat, with this previous resistance region turned support region more recently. So we've seen that complete role reversal. And then you've got the support region through here that is going to currently act as our resistance or previous support that we just need to be very mindful of. Coming back in though, just popping out back out to the daily time frames, we have seen this lower high, which led us into some form of belief that there may be a potential break back down to 193. That doesn't seem to have happened. If today's close or today's candle is anything to go by, then a failure to break back below would have occurred, and we'd definitely be looking more into seeing runs up to 197. So at the moment, positivity surrounding the pound seems to be far outweighing any potential negatives, and we do need to take that into account. So like I say, at the moment, any runs back up towards kind of 195 are definitely going to spell out potential long opportunities, certainly up into the 80 level and then potentially 196 in extension to that. Pound dollar, we've seen a very strong dollar. If we come over to dollar yen again last week, I'll just come to the daily to pinpoint it a little bit better. Last week, massive pushes for the pair. I think the only one that we didn't rise against was pound CAD, just because we've seen a very dollar CAD, sorry, just because we've seen a very strong Canadian dollar. But for pound dollar, returns back to 140 seem almost odds on at this point in time. Last week, obviously, we saw the break above, retest and rejection away. Missed that opportunity. It now looks as if we're going to break potential highs. So a 4-hour close here could potentially lead us into pound dollar longs. There are dollar opportunity at dollar fundamentals that could hamper these opportunities as we go through the week. Today there's just some production figures, so nothing too strenuous. But again, as we get towards the end of the week and Friday, again, we have PMI, so inflationary figures and treasury reports to be mindful of. At the moment, though, we can see where we've had this previous pocket. So I would be inclined to wait until the highs have been taken out at 137.50. But once the highs at 137.50 have been taken out, then pound dollar longs look highly probable. Come out onto the daily time frame. If we were going to see pushes away, if we were going to see that swing and rejection, it's likely to come where we are sat now. So any failure to do that and the breaks and pops back above would definitely turn attentions into potential runs up. Just pull this up at the moment into around about 140. So it just leaves us to watch, wait and see what happens. Rejections away, however, then I would be inclined to wait for 136.80 to be taken out before looking for any potential downside pushes. As things stand at the moment, I don't see that that's overly going to be the case. I would turn attentions more towards potential runs from where we are now currently. So any pops out of this region at the 50 level, back up towards potentially 140. A bit of positivity and a little bit of fundamentals going our way would probably likely see that happen before the week's out. So it's definitely one to keep an eye on. In fact, just going to alert it. Pound CAD and pound Oz are the only other two that I wanted to look at here. Pound CAD, obviously we've gapped quite significantly overnight. We can expect to see that close, but last week, significant, or since September, significant pushes to the downside. Last week we saw some gains and the start of what could potentially be a retracement. We've seen the pair bottom out a little bit here. Doji formation coming into play, and we can almost expect to see those potential retracements back up to 173. So at the moment we are just looking for pushes back above on the 4-hour or daily time frame. The gap isn't the ideal situation. We'd never like to just continue trading off of that, but we've seen time and time again where that is the case, and we just see price continue anyway. So be it. So if we can get the push back through and break through the highs at 70.50, then like I say, we can look for potential long opportunities. As things stand at the moment, it might be that we come back, create a higher low somewhere in and around about 169.50 before then starting to see drives back to the upside. Just have to see how things progress, certainly on the 4-hour time frame. If you come into the 30 minutes, starting to see what could be the beginning of these fresh swings. So again, rejection away from where we are at the moment, and those pops back above 70.60 would definitely lead us into long positions. Just going to alert that. So yeah, there are a few things to keep an eye on, certainly surrounding pound positivity and pound strength. Although pound yen, pound CAD in particular definitely lead us into the opportunity where we may see pushes to the downside continue. Pound Oz. Last week we saw weakness come in and the pop back below the previous lows at 186. Coming into the 4-hour time frame, you can see that we're just currently chilling around this area of support and resistance. So this little zone at the moment is becoming quite a significant place for us. Again, could definitely lead into runs into 181.50, but breaks above would lead us back towards 188.60 or 188.50. So we have a couple of 100 pip move either way here. We just need a little bit of confirmation. As that comes into play, probably going to likely see it more towards the lower time frames at the moment. The logical thing to do would be to wait for 186.50 to be taken out and look for potential drives to the upside, or to wait for the lows here at 185 to be taken out and then look for runs back down into 84, and then obviously from 84 down into 82.50. So potential surrounding pound Oz at the moment. I'm not going to bother alerting anything because we're just in a little bit of no man's land. But we have potentials. There is Australian monetary policy meeting next tomorrow even, that we need to be mindful of and to watch out for. That could potentially obviously see some pushes and some drives strengthening the Australian dollar up. There's also a speech on Thursday by the Governor, Bank of Australia, Governor Lowe, that could potentially see us push as well. But we'll cover some Australian currencies. Actually, let's do it now. The Australian dollar has been pretty strong. If we come into the weekly time frame, we can see against the Swiss franc that it gained quite significantly. Friday's daily saw it stall a little bit, so I can definitely see pushes back to 168 occurring early this week. But if you go Aussie dollar, significant pushes to the upside, failure to break the lows, then obviously drives throughout October so far back to the upside. The only thing here is the fact that we may be stalling and seeing price failing to break above, which would lead us into favouring the longs with pound Oz. Potential Aussie dollar shorts could come into play also. So there are some interesting opportunities at the moment, but a lot of uncertainty because there's a lot of speculation about central banks wanting to take the plunge, finally giving into inflation and trying to cap inflation, taking that plunge and raising rates. Now, Bank of New Zealand have already made that leap, and it looks as if the Bank of Australia are riding the coattails of that. Not necessarily with their intentions to raise rates anytime soon, because they've been more than vocal that that's probably not going to be the case. However, it does signify that things in that part of the world are starting to pick back up, and they have been riding the waves of that. So, surrounding potential opportunities with Aussie dollar at the moment, it would make sense to wait for 74.50 and the highs to be taken out before looking at any potential long runs. But we could take then definitely opportunities from 74.50 up into 75.50 would make a lot of sense. Failures to break back above the 50 region would almost certainly lead us into wanting to wait for probably 73.50 or at least 73, or at most 73 to be taken out before looking at further runs down in towards 71.50 and 71, an extension to that. Aussie New Zealand is another one that is worth looking at. It doesn't look quite the same as the Aussie dollar chart, but you can see last week's spike up leading into a significant push back to the downside. Weekly, daily shows it lovely. You can see the lows and support region through here that we came and retested, seeing that role reversal and drives back to the downside. So we're at a significant area with Aussie New Zealand as well that could spell out where the Australian dollar is kind of heading. Obviously, we know that New Zealand dollar very strong, buoyed up off the fact of their rate hike. So we are seeing the potential at the moment that we could definitely drive back towards the upside with Aussie New Zealand, which will definitely spur the Australian dollar on a little bit when it comes to other currency pairs also. So definitely one to watch, definitely one to be mindful of at the moment. Coming into the lower time frames to look for any potential opportunities to enter. It doesn't look like there are many at the moment, but what we are starting to see, I don't know, 104.50, 104.40 to be fair. You could probably look to take potential short positions if that does break down. Anywhere in and around that region, you could probably take shorts back down into like 103.50. So potential for a trading opportunity there. Longs, actually, to be fair, when you look at that period of consolidation, breaks back above. So anything above 105, you could almost certainly take potential longs back up as well. So it's just something to be mindful of, and could definitely lead us into a bit of an indication of where potential direction goes. Also surrounding the yen again, very, very strong moves but we are starting to see price stall, starting to see price slow a little bit. So we could potentially see drives back to the downside, at least short term, back into kind of maybe 83.50 for the pair. So just keep an eye on potential yen strength come back in, just for, even if they're just retracements. New Zealand yen is one that I want to take a look at quickly. Doesn't look like I've got it marked up actually. But again, it doesn't take a rocket scientist to see the huge amount of buying pressure that came into the pair and taking out previous highs also. So just bear with me while I mark this up very quickly. It's quite a choppy pair. In fact, I'm inclined to just go into the weekly, because there's no real clear-cut areas of to be mindful of there. But definitely is there. Definitely is here. Come a little bit lower into there. Look into that region. Just come to the daily. What does that look like? So yeah, there are a few things to be mindful of here, but we're starting to see, certainly surrounding this region at the moment, this 30 level, the rejection away back to the downside, and the potential that that may bring with it for at least runs into 80. I just want to clean this chart up a little bit because it looks horrible the way that it currently is. Just going to get rid of that level. I'm going to come in, just pop that through there, get rid of that level, and then just give it a high, pop that in there, and then let's just go from here, as we are currently pushing downwards. And then off of that level there. So just come back to current price action. Price is stalling significantly at the moment, so it breaks back above 81.50. Would definitely look for us going back to the upside. 81.50 up into 84. May see price stall a little bit around 82.50, but we'll be mindful of that as and when we get there. Breaks back below or pushes back into 80 at the moment, could potentially lead into a higher low. So that look for pushes away from 80 back to the upside, or potential breakthroughs for pushes back into 78.50, which would then give us a retest of breakout from last week. Although looking at the chart, it looks as if we'd already seen that occurring beginning of last week anyway. So it might be that price only finds its way back towards kind of 79. But it's something to be mindful of and something to keep watch on. Pullbacks surrounding New Zealand yen or any New Zealand pairs would definitely hold a little bit further weight back into that Aussie New Zealand opportunity to the upside, and obviously then turning attentions into more pound Oz and pound New Zealand focus towards possible upside pushes also, and opportunities that we may face there. New Zealand CAD is one that I wanted to look at. If we've got potential opportunities that we're starting to see come into play, then New Zealand CAD would definitely weigh into that also. Just going to come to the daily time frame. Yeah, I quite like the look of this. This could definitely lead us into something. Let's just mark this up a little bit. Come in. Daily rejecting away, pushes to the outside. Definitely to drives into there. Pushes lower. Support region around this zone here. Okay. Just going to come 4 hours, try and tidy this up a little bit again. But as things stand at the moment, we're definitely seeing potential opportunities surrounding New Zealand CAD. Pushes away as it stands at the moment that we're currently starting to see could lead us into short positions. Now, the likelihood is that we want to wait for this area to be taken out first and foremost. Just need to pull that down a little bit. But if we can get through this zone and anywhere into a kind of around about 87.20, then pushes back into 86.20 are pretty odds on, to be fair. So that's definitely something, or this is definitely something to be mindful of and something to watch for. I'm going to pull that in up to there unless there's other reasons not to. Yeah, look at the support. Okay, we'll pull that back in a little bit lower, to be fair. We come over into this region. Just look to take into account these lows through there. Come in. Just point that one. Lows through here off of that. Okay, that will do. So as things stand, New Zealand CAD wise at the moment, any breaks back below 87.40 would definitely lead into potential drives back to 86.20. So possibly have to wait for an entry around about 87.20, but after that we look pretty set back to 86.20. So that looks pretty good. If that fails to occur, pushes away from 87.20, I would be inclined to, you can either trade the 60 pips up to the 80 level, but I would, nope. I'd be inclined to wait for the 80 level to be taken out before looking at potential long opportunities up towards 90. As things stand, the Canadian dollar looks to be leading the way, and that kind of rings true across the vast majority of Canadian pairs, also dollar CAD at the moment, where we will be looking for potential breaks below. So New Zealand CAD and potential breaks out of 87.20 look extremely possible and extremely likely as things stand at the moment. So definitely be aware of that. Dollar CAD last week, huge pushes on dollar CAD again for probably the fourth week in a row. You can see on the daily time frame we've now broken back below significant area of support, and we are testing at 123.50, quite a key level again. So any potential breaks now back towards the downside, I'm just going to get rid of that because that's not really that relevant to us now. Any breaks back down below the lows in and around kind of 123.50 would almost certainly lead into runs back towards 122.50, and then obviously potentially even lower than that, coming in and around 123.50 at 121.50. So a lot of opportunities surrounding the pair. Not too much in the way of CAD fundamentals this week though. There's a business outlook survey thing today, not overly significant. CPI figures on Wednesday to be mindful of, and some retail figures on Friday, but nothing that's likely to rock the boat. CPI figures though could definitely give us an indication as to whether or not we are going to see a potential rate hike in the near future for the Canadian dollar. That would definitely lend further weight into this pair crumbling. Dollar yen, massive drives and massive pushes last week, but we're currently just chilling around this area at 114.50, 114 at the moment. We've got this kind of little range forming. Significant levels for the pair previously. It doesn't, let's just come daily, will probably show it, to be fair. We can see the significant resistance that this has held previously. So breaks back above 114.50 would lead us into almost certain runs up towards 115.50 and 116. Definitely be mindful and watch for that. In fact, just gonna pop through here and have that level already alerted as a potential target zone. But like I said, we even if we come actually lower, let's come to the hourly time frame, you can start to see where we've got this little bit of consolidation forming at the moment. So potential breaks of this zone could be quite key. So drives back above 14.50, as we said, definitely look for potential long positions. Anything that drops out of the lows of 114, we can look for short positions, and there is definitely scope for that to run back if we do see the dollar weaken off a little bit. Like I said, again, not much until later in the week when it comes to dollar fundamentals. Realistically, looking towards Thursday and then Friday before we start to see any real significant impact from fundamentals surrounding the dollar. So potentially look for pokes out to the upside. That doesn't, however, discount dollar CAD positions or anything along those lines, as they definitely will still hold weight. Just want to box the same area off on CAD yen. Like I said, still definitely waiting and definitely looking for potential upside on the Canadian dollar and CAD yen as a pair. However, drops to the downside and a potential retest of 91.20 wouldn't go amiss at all. Euro yen looking positive, potential pushes back to the upside. Saw a brief moment this morning where it looked like we might sell off. That hasn't happened. And definitely looking to turn attentions back towards a potential break above 133 now. And then a return back up to 134.50. Euro USD might look quite similar. Euro dollar potential breaks back above 116.20. Could be quite significant for the pair looking into potential longs. Don't really fancy Euro longs though, but what I do quite want to look at is Euro CAD. EuroCAD once again stalled and failed and broke back below the 150.50 region. I'll just get rid of that. And we've now cleared out of significant support zones too. Still got 100 pips for a potential drive back down, even if we were to take out the lows at... I don't really like it. It's forcing a position, isn't it? Because being realistic, you're not going to take a long until 144 goes. You're not going to take a short until 143 goes. And 142.50 would be your initial target. That's not overly worthwhile. You're better off waiting for 142.50 to be taken out. Where do you go from 142.50 to 140, then 138? Definitely watch, but I would definitely be mindful of potential retracements into 146 or 145.80 before seeing potential further downside for this pair. I don't see that the euro is anywhere close to wanting to strengthen up at the moment. But again, such significant drives, very little pullbacks, very little returns. So definitely one to be mindful of. So keep an eye on that as potential. As things stand at the moment, though, not really a trade there. So we've covered a fair bit this morning. Quite a lot to go over and quite a lot to go through. There's some fundamentals, but nothing overly significant this week. So nothing to get too het up or caught up by. But as we move into the latter parts of this week, we should start to see how things are going to unfold surrounding some pretty significant and some pretty major currency pairs. Certainly when it comes to kind of rate decisions and things like that. So be mindful, be cautious as we progress and as we go through. But as things stand at the moment, there are a lot of opportunities. We've set some pretty significant alerts. I'll update my watch list a little bit later. And we'll see how we progress. I hope everyone has a good day. Let's look to bounce back from a disappointing couple of weeks. And then start to claw back the potential losses that we have incurred. I hope everyone's good. I will catch you tomorrow morning. And we will go from there.